Video solution walkthrough. This is for exercise 1620. This is from the Intermediate Accounting 17th edition textbook, which is about to become the 18th edition. Authors are Don Kiso, Jerry Weingant, and Terry Warfield. The question used in the presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright 2019 through 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. Okay, so we've got on January 1st, Lenin Industries had the following, had the stock outstanding as follows. They have cumulative preferred stock issued and outstanding 10,000 shares, common stock $10 par value issued and outstanding 200,000 shares. To acquire the net assets of 3 smaller companies, Lenin authorized the issuance of additional 160,000 shares. The acquisitions took place as shown below. On May 14th, Lenin realized a $90,000 before tax gain on discontinued operations. On December 31st, Lenin recorded income of $300,000 from continuing operations. Assuming a 10% tax rate, compute the earnings per share data that should appear on the financial statements of Lenin Industries as of December 31st, 2020. Okay, so when we're looking at this particular situation, what we're going to go through and do is let's focus first on the weighted average shares outstanding. So just give me a moment. Okay, so to go through and to determine earnings per share, we'll go ahead and do net income first. Okay, so first one here is December 31st, Lenin recorded net income of $300,000 from continuing operations. I'm assuming that that's going to be after tax. So we're going to have income from continuing operations of $300,000. And this is going back to chapter 4 in your textbook in terms of talking about how we handle discontinued operations. So you have a gain from discontinued operations. And this is going to be 90,000 times 0.8. So this is 90,000 because we show gain from discontinued operations. This is going to be shown net of tax. So right over here, we're going to have 90,000 minus 18,000, which is 90,000 times 20%. Okay, so our total net income is going to be 372,000. Now, if you remember back from chapter 4, when we go through and are preparing our income statement, we need to go through and break out when we have a discontinued operation, especially when it comes to showing earnings per share. And just give me a moment, I will show you an example of that. So this is for CBIZ. And I'm pulling this up because this has, if you can kind of see when they're doing earnings per share, you show from continuing operations, discontinued operations, and net income. So coming back over here, when we're going through and doing our question, what we're going to do is we're going to kind of do the same thing. We're going to have earnings per share, continuing operations, earnings per share, discontinued operations, and then we'll have and then we'll just have net income. Okay, so right over here, so ultimately we're going to be showing this on a per share amount. So let's go through and have some fun with this. So right over here, what we're going to do is we're going to say, okay, now we've got to figure out what are the total amount of shares that we have outstanding in order to figure out earnings per share. So we had on 1/1/20, there were 200,000 shares outstanding of common stock. These shares were outstanding for the full year. So we're going to do this by 12/12. The book solution does this differently, and I'll kind of show you why I like doing it this way. It's just a little bit cleaner. So next one is over here, the preferred stock. We're not going to be concerned with that because it's not convertible preferred. It's this regular preferred. There's nothing here talking about its convertibility. So the first acquisition we made was on 1/1/20, and this was for 50,000 shares. Now, when we have 50,000 shares, these were not outstanding for the full amount of the year. These were outstanding for 9/12 or from 4/1/20 through 12/31/20. So these were outstanding for this 200,000 was outstanding for the full year, 1/1/20 through 12/31/20. So this will be 500,000 times 9/12 or 37,500. Over here on 7/1/20, 80,000. This is 6/12. And this is going to be 40,000 shares, or 7/1/20 through 12/31/20. And now we're in October, 10/1/20, 30,000 shares. These were outstanding for 3/12. So right over here, we're basically going to have now 30,000 times 3/12 or 7,500. So this is going to be from 10/1/20 through 12/31/20. So again, great problem, great question to go back and look at is going to be when we were doing the weighted average construction expenditures. So that's back in chapter 10. So our total weighted average shares outstanding are going to be 285,000. Your book shows what they do is they accumulate it, but I just like doing it this way. For me, this is easier for me to visualize. So that's the way that I do it. The textbook solutions show a different way to kind of go through and have that happen. Okay, so right over here, what we're now going to go through and do is we're now going to go through and figure out how to compute earnings per share. So basic earnings per share computation. And as we can see right over here, it's going to be net income minus preferred dividends divided by the weighted average shares outstanding during the period. So right over here, we now have to figure out what our preferred shares are going to be. So this is 6% cumulative preferred stock. Doesn't say anything about prior dividends not being paid, but it right over here. So this is $100 par value. So the amount of my preferred dividend. So this is going to be 10,000 shares times $100 par value times 6%. So my preferred dividend, so our earnings per share formula is my net income minus preferred dividends divided by the weighted average shares outstanding. So over here, we've got net income minus some of my preferred dividends are going to be so my preferred dividends are going to be 60,000. So for right over here, this is going to be 300,000. 300,000 minus 60,000 divided by 285,000, or roughly 84 cents per share. For the earnings per share from the gain from discontinued operations, what this is going to be 72,000 divided by the weighted average shares outstanding, or 25, roughly about 25 cents per share. And then over here, when I go through and I add up these two amounts, I get $1.09. So that's how we're going through and figuring this part of this out. Okay, so that is question. So compute the earnings per share that should appear on the financial statements of Lenin Industries. So this is how we would go through and present it. And this would be shown kind of similar to over here to CBIZ, continuing discontinued operations, and then net income. And this would be basic earnings per share. Okay. So I want to thank you for joining me here today. Also want to thank Wiley for continuing to allow me to use their videos. Please don't forget to like and subscribe. If you would like to see other solutions, please feel free to ask for them in the comments. Have a great rest of your day, and I look forward to seeing you on the next video.